long upper shadow. What does that mean? Well, in this context, it's kind of an early, morning star reversal, but not really. I don't know that I really have a trade here. And so maybe we just wait and we just analyze it, or we just wait a little bit here. Well, next day we got a bearish candle. What do you think might happen based on this? Well, okay, I got a spinning top here, a little counter move. It traded way up, long upper shadow, bearish candle. Gosh, that tells me that the momentum is moving down. Where would my next target be? Well, my next target's not very far, but let's see if we get there. And what you're going to do in the drilling phase is just start to interpret candle data. Sure enough, we didn't get there. But now if you're tying in your chart patterns, you say, oh, I do have a stair step. Maybe this would suggest a bearish trade. Let's just see what happens. And, that's an earnings date right there. That's why you got a big gap. Now, in your historical back testing here, you're not going to know earnings dates. You're not going to know when that was. So it's just going to jump out of nowhere about every 3 months. It'll freak you out. Just let it go. Okay, just let it go because there's no way you could have known when all those were. Now let's just continue working through here, and you're going to work with your candles. We're going in a sideways movement. You say, I got some good bullish candles. I had a good bullish gap out here. Okay, that's a breakaway gap. I initially did have a bottom. Oh my goodness, we might have a chart pattern. Let's zoom out here. Whoa. Ladies and gentlemen, if you look at this in a big picture, could we have an accumulation period? Wow. Could this have been an accumulation period and we never saw it? Sure, it could have been. Did we just learn something else, ladies and gentlemen? We did. What did we learn? We learned that it's possible to look too closely. It's possible to be so zoomed in on the detail that you miss the big picture. And you miss the fact that there was actually an accumulation period happening here. Well, that actually would suggest that we're going to maybe have a bullish trade eventually breaking out, but we're definitely trading too tight. I mean, trying to get all those little details, no wonder we're getting whipsawed and sawed and in and out of the wrong trades all the time. So what would we do here? Well, we might say, just make some notes to ourselves. It's an accumulation period, and I'm just going to wait and see. I'm not going to try to get into trades until a new trend breaks out. What would be a good way to test if there was a trend here? Oh, the moving averages. Yeah, that would be a great time to look over and say, did the moving averages, oh, wow, they could have helped me a whole lot. Wow, too bad I didn't look at them, right? You see, guys, we're learning. We're learning. And as we're looking at the details, you see the weaknesses. You see the weaknesses of each aspect of trading. You see the strengths of each aspect. So that as we go on through and we start to not just drill our candlesticks, but we start to drill our moving averages, and we start to drill our stochastics and our RSI and our MACD, and we start to practice with each of these. And as we're looking here at these three oscillators, we start to run it forward, and we say, well, stochastics do suggest a bullish move. Turns out I am breaking bullish here. Let's see how far it goes. And, right as I'm running up here into my resistance line, stochastics are starting to slow down right at overbought. That's interesting. I might be getting a pennant pattern. And as you test these things, initially it's going to be frustrating because you're learning. But as you let it run and as you practice it and you do more and more and more, you're going to start to recognize the signals. And as you start to recognize the signals, you know what that means? It means you're going to be able to put them into practice. As you start to put it into practice, your drilling phase will start to come to a completion, because as you start to put things into practice, what you can do is skip to the next phase, which is what I call speed trading. Now, speed trading is much more detailed. Speed trading is going to use real historical market data, just like what we were doing. We're going to walk through the entire trade setup. Instead of just drilling one step, instead of going really fast, maybe keeping a journal, maybe not. For speed trading, we're going to keep a journal. At least in the end we will. Maybe at the beginning we don't, but certainly in the end. Most importantly, speed trading, we're walking through all 5 steps of confirmation. We're going to set the trade up. We're starting to get really serious about analysis, okay? We're going to move forward one day. Don't go forward a whole bunch of days. Go forward one day. See how the trade worked. Make the next day's trading decision. Now, the reason I call this speed trading is because this is just like, well, it's not just like, but it's very similar to virtual trading, but you don't have to wait 24 hours to see if you were right. You do the full trade setup, and then you look to see if you were right. Full trade setup, look to see if you were right. And that's the way the speed trading is going to work. Okay, so let's get over here and let's do some speed trading. Okay, so now let's pick another stock. Let's come in here and let's. Oh, I don't care. Let's John Deere. We'll do John Deere. Okay, so we come in here and again, I don't trade John Deere very often, so I don't really know too much about what's going on with it, especially not 2 years ago. I have no idea. And even for stocks that I do trade, I can't remember this stuff. I mean, it's amazing how much you cannot remember. Okay, so what we're going to do is we're going to look at this, and from a big picture standpoint, do we have the lines drawn? We do have the lines drawn. It's pretty obvious. Got support and resistance drawn in there. I'm going to come in here. I'm going to put a trend line in here because it does appear that we've got some trends that are working with us and for us. There it is, okay. So then what we're going to do is we're going to zoom in on the details. And let's just go ahead and do a trade setup. Even though I'm kind of rushing through the line drawing aspect, let's go ahead and start doing a trade setup. So as we look at John Deere, we're going to go through all 5 steps of confirmation right now. What does line drawing tell us? Go ahead, tell me. What do you see when you look at this? Running into resistance, also running into support, okay? We've been in an uptrend, okay? So let me just mark some of this. We got resistance here. We got support in here. We've been in an uptrend. What else? What else you guys see in here? I'm going to let you guys do some of this. We're in an accumulation or distribution period, okay? Consolidation, better said. In a channel, it's below my trend line. That's true, okay? So if you look at this trend line right here, we're actually below the trend line, but it's not broken through this support that we've got about $55, okay? Moving sideways, we've been stuck in a trading range. Okay, these are all really good. Okay, very, very good. You guys are seeing it. Okay, so if I were to draw some chart patterns on here, are there any chart patterns you guys can see? Let me zoom in so you can see a little bit more detail. Good observations. If you had to pick a direction right now, what would you say, bullish or bearish? You don't know. That's a good answer. Bear, okay. I got some bear, I got some bull, and I got a couple I don't knows. Okay, all fair, all fair. Okay, so nobody said any patterns yet. Okay, let me help you out with some patterns here. There is a pattern in here that I'm going to mark. We will start right here, and I'm going to put this line right in here. And do you see we've got a triangle? Okay, there's a triangular type of a pattern in there. Does it fit for the triangle? Yes, it fits very much for the triangle. Very, very much works. It's a consolidation period. It's about the right time frames. Kind of hard to trade on the inside there. Now, just based on this alone, where do you think we could set a bearish and bullish entry? Do you think it would work to say, well, if I go bullish, I'll maybe break out about 60.18. Go bearish, maybe break out about 53.72. Or if you really want to be safe on the bullish side, you wait until you're way above the resistance. But for now, for this exercise, we'll put it in here. And realize there's no right or wrong answer initially. Initially, you're just getting experience. You're just looking. So the worst thing you can do is be afraid. The worst thing you can do is say, I'm afraid to put that line in there. What if I'm wrong? That's the worst thing you can do. The best thing you can do is just start trying. Okay? So now, Frank says, can you look at Bollinger Bands? Yeah, Frank, I'm not there. I'm not there yet, buddy. All right, so we've looked at our lines. Our lines are basically saying, I don't know. We looked at our chart patterns. Our chart patterns say symmetrical triangle. This has got a 50-50 chance. That's starting to give us a pretty good idea of where we would go bullish or bearish. Do we have any candlestick patterns that tell us anything? Well, not really. Certainly not inside of a consolidation. What we do have is we got these long lower shadows. They do confirm that we're getting ascending support, and we've got these, touches up here, a lot of these reversal signals right on turning points. So that does suggest we've got the downward selling pressure, but we really don't have any breakout. We don't have any real good clear signals here. Okay, what about moving averages? Well, let's see if the moving averages tell us anything. Before I do that, what do you think a moving average would tell you in a moment like this? What would you expect them to look like? You would probably expect them to look like they're going sideways. Okay, so let's come over to our moving average signals, and oh, look at that. They're going sideways. I'll be darned. Now, if you didn't know to expect that, this would be a good way to experience it. However, after you've drilled these things and you've been through that drilling phase, now that we're in the speed trading phase, You should have already known that. You would have known intuitively, if I'm in a triangular sideways move, my moving averages should be going sideways. And you guys hear me say this in Power Trader all the time. I'll say, oh, this is what it should be doing, because I'm so used to it. And then sometimes it's a shock, and I'm like, oh, I can't believe that this wasn't happening the way I thought it was. You know what I'm saying? Anyway, so that's the way that it happens for you here. All right, let's moving averages, moving sideways here. They are crossing bearish, but should we expect a bearish breakout with moving averages crossing bearish in a sideways move? What do you think? Probably not. No, not in a sideways move. If it's a sideways move, you discount all moving average signals. We're going above it, we're below it, we're getting crosses. It's all chaos because it's a sideways move. Long-term moving averages, what are they telling us? Well, that actually is pretty insightful. What do the long-term moving averages tell us? Long-term moving averages tell us that since July 2009, we've had a bullish cross, we've been in a bullish trend, we've been recognizing the 100 period as a support, and right now we are just right above the 200 period. And technically the angle is still in a bullish trend. That's pretty interesting. Long-term trend is a bullish trend. That's interesting. Okay, so maybe you would just make some notes of that. That's interesting. Move forward. What do your oscillators tell you? Oh, okay, my stochastics is heading down. My RSI is almost back down to oversold. By the way, if I drew a little line through here, it's right on the most recent oversold levels, which correspond to these valleys. So I'm thinking it might be oversold. MACD is crossing down, but it's right on that zero line where it seems to have been stuck for 2 months, which coincidentally is where we've been stuck for 2 months. Okay, just making analysis. Moving forward with my Bollinger Bands. What are they telling me, Frank? Well, they've consolidated in here, and they pretty much are capturing the majority of the move here, not really expanding either direction too well. Well, what do you think your parabolic and your ADX is going to be telling you? Well, ADX is very low, all the way down here at 20. Your parabolic is flipping back and forth, suggesting that you're in a sideways move. Ladies and gentlemen, is it safe? Can we say that John Deere on this date, July 1st, 2010, can we say that we're in a sideways move? Yep. You really can't get much more clear than that. Now, the question is, how do you trade it? Well, if you're going to torture yourself, you'll sit here and every day you will try to trade this thing. That would be torture. Here, let me show you how torture looks. Torture is, okay, I'm going sideways. Let me see if I can get in here about 57 and ride it up to 58.20. Let's just try it. Let's move it forward one day here. And you move it forward one day. Oh, my goodness, I can't believe that happened. I got stopped. And you just torture yourself, wondering why in the world it's hurting so bad. No, that's not good. Here's what we should do, especially since we're speed trading and we're going to make this thing go fast. We're going to spread this out a little bit. I'm going to lower my trigger just a little bit. I'm going to come over here and I'm going to say, okay, if I can get below about 53.39, that's going to be a pretty good breakout. 61.14 maybe. Better breakouts about 61.55. I might be willing to go with that because my long-term averages suggested a bullish trade, but really probably 60, about 63 would be a good bullish trigger. And I'm just going to wait. And when I say wait, I mean I'm going to sit here and I'm just going to push it forward, and I'm not even trying to set a trade up. Wait. I broke my triangle. Wait. Stop. Pause. Ladies and gentlemen, we're getting close to a trade setup. Do we have anything that would help us? I'm so glad you asked. Zoom in on the details. What is this candlestick pattern? What does it suggest? That suggests a bullish move. Okay, this is looking good. Trades are getting set up. They're coming to us. We've been patient. We waited roughly 3 weeks. We waited for the trade to come to us. We're starting to get everything shaped up. The opening candle, because I already accidentally pushed that in here, we're getting very close to our first trigger at 61.55. If you took it, you got triggered. If you didn't take the 61.55, you traded right up to the next trigger, and we got a massive shooting star. What do? Whew. Now we're getting intense. We're in the trade. In both cases, we're in the trade. What do you want to do? And this, ladies and gentlemen, is where you build your trading muscles, right here. We've done the whole trade setup. We waited 3 weeks. It's all speed trading, but we waited 3 weeks. We set the trade setup. We did the initial one at 61.55. We got triggered. For those of you who are being more conservative, you did 63.01 and you still got triggered. And at the end of the day, we got a massive shooting star. What do you want to do? I'm going to suggest that we put a stop right here. No, I'm going to suggest we put it at the bottom of this gap. Suggest we put a stop about 60.70. Now let's check all of our indicators. Volume is increasing. It seems to suggest that the recent volume likes the bullish move. We've obviously started to break out of the triangle. We've obviously started to have some good positive movements here as far as the line drawing is concerned, but resistance is holding strong up here around $62, and dang, that happened once before. Oops. Okay, let's come through here. Moving averages, what do they say? Well, moving averages are actually crossing bullish and looking pretty happy here. So moving averages look good. But, it's a little early, maybe or maybe not. Long-term moving averages, well, we're back above the 100. It looks good. Oscillators, well, we're getting overbought. This is where we could go down, but this is also what it would look like if we were going to have a trend. MACD looks good. Bollinger Bands, what are the Bollinger Bands telling us? Bollinger Bands are starting to break bullish. Parabolics on the bullish side, ADX is increasing. It supports the trend. What do you guys want to do? Well, we're in the trade. I put a new stop in here at 60.70. You could do it like this, or you could pull over your journal, and you could make your journal notes, or another one you could use would be this one right here. So I don't know which day of the week it was. It was this July 21st. So we'll just put in here 7/21. We went bullish. We'll say we went in at the 61.55, so it won't sting as bad. Those of you who went at 63.01, this one could sting. The stop is at 60.70. Let's see what happens. Okay. So next day, what are we going to do? We're going to move it forward. We've done all of our analysis. Next day, oh, we're starting to feel a little bit better. What do we do the next day? What do we do to our trading plan? All the analysis is still the same. So 7/22. Where's my target, by the way? My target is up here about $65. $65 is my target. Okay, so my first target, $65. Current price, $62.81. My stop, I'm going to move it over. My target will move over. I'm already in the trade. Next day, move it forward. What happens? Oh, we're getting close to our stop, or to our target. One more day, what happens? We hit our target almost right on. There it is. Now, check this out. I pushed it forward a few days in the interest of time. But what I want you to do is I want you to go day by day. I'm doing this a little bit fast. But notice what happened here. We got a great bearish engulfing candlestick pattern. Okay, so here's what we want to do. We come back over here to our thingy, 727. We just kept going forward all the way over to, we'll say it's Friday now, 727. The stock hit our target, so we will say that we got out at $65. We were in at 61.55. We're out at 65. That is a profit of about $3.50. Okay, about $3.50. Now, if you were to sit here and do a new trade setup for it, what would your trade setup be? Because we traded to our first target, we took our profits. Well, we can pull this up and maybe do another bullish entry about 65.50 and maybe do a bearish entry down here below these lows, 63.81. Let's see what happens the next day. Sure enough, we're starting, we went into a bearish trade. Did we want to go into a bearish trade? I don't know if we wanted to, but we better document it because we just did it. Okay, so because I don't want to erase that journal, I'm going to come down here, 729. 729.10. We went bearish at 63.81. 63.81, whether we wanted to or not. And then you can make some additional notes, whatever you want to do. Where would your stop be? Our stop should probably be about 65.51. In fact, this is the kind of stop in a scenario like this that you could call a switch stop. What does that mean? It means that if I trade back up and hit 65.51, I will switch positions. I'll go from bearish to bullish. In reality, I think what we just learned is we set our stop too tight. That's what I think we just did. Or we set our trigger too tight, I think that's what we just did. We're going to find out right now in just a second. Okay, so what we're going to do is we're going to move it forward. And as we move it forward, what happens the next day? Boom! The bullish trend continues. Stop. What did we just learn? We set our bearish trigger too tight at 63.81. We also learned something else. And what we learned is a bearish trade that is counter trend is dangerous. Ladies and gentlemen, that is one of the most profitable lessons you could ever learn right there, and I let you walk right into it. Aren't you so grateful? Because, ladies and gentlemen, most of you would have done what I just did for you. You would have set this up and you said, I'm at resistance. What if this thing goes bearish? And you missed the fact that we've got gaps that are bullish. We've been in a bullish trend. You're trading counter trend. Sometimes in Power Trader, I'll set a trade up and I'll put a bearish entry way down here below. I'll put it way down here below all these supports. And people are like, well, where's your bearish entry? And I say, I don't have one. They say, why not? You guys are trying to set this trade up. I don't want to set up a counter trend trade in a bullish move. Same thing in a bearish move. I don't want to set up a bullish trade in the middle of a bearish move. You want to trade with the momentum. Had we just left our trigger at 65.51, look at what would have happened. We would have caught the next big breakout after the stair-step pattern, and if it kept going, we would have made it right to our next target where we got a little bearish candle. Do you guys see how this is exceptionally educational? Now, here's what I want you to do. What I want you to do in this speed trading exercise, we just did a month's worth right here. It took us about 15 minutes. If you were documenting every little bit, it would take you much longer. You could do 3 or 4 hours worth of time on this, and it would take you might get, 3 or 4 months. But we obviously aren't going to spend 4 hours right now. But you could do that. And what you're going to find, though, while it might be frustrating because it takes 3 or 4 hours of your time, you just got 3 or 4 months worth of education. How much more experienced do you think you'll be after you've traded for 2 years? You'll be a lot more experienced. Well, what if you can speed that up, and instead of taking 2 or 3 years to get that experience, what if you could do 2 or 3 years worth of stock, and you could do it in a week's worth of historical replay? Wow, that's powerful, isn't it? How many lessons could you learn? More importantly, you're not waiting for 24 hours. You can learn the lessons in real time, and you can get them very, very quickly. You can assimilate that data, and here's what I want you to do. When you get into this speed trading, what I really want you to do is I want you to get to the point where on 60 to 70% of your trade setups, you're profitable. That's what I want to see. 60 to 70% of your trade setups are profitable. Now, if you have 60 to 70% of your trade setups that are profitable, and you've gone through all 5 steps of the trader of the 5 steps of confirmation, and you've got yourself drilled through this, you can recognize your chart patterns, you can recognize your candlestick patterns, you can recognize your support and resistance, you can recognize your moving average trade setups. Once you've gotten to all that, and you can sit here and do all of it together in speed trading, keeping good documented journals, and you can prove to yourself that, hey, over the course of 25 trades, I've been 60% profitable. Wow. Let's do 10 more. Let's see what happens. Wow, I was 63% profit. And I don't mean 63% profit. I mean 63% of your trades were winning or break even. In other words, you're not losing a bunch of money. The goal here, if you're missing it, let me just be implicit. The goal is to read the chart. How many of you guys recognize and realize that reading the chart's where the money's at. If you can pick a direction, you can pick a strategy. The strategy's easy. You just got to learn to read the chart. Okay? Now, once you get to this point, ding, 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 we're into virtual trading. Now, what's the difference? Virtual trading, using my metaphor, virtual trading is like preseason football. It's the scrimmage that doesn't count, but you still dress up like it's a game. You still sell tickets. You still let all the fans get excited. You're going to try new strategies. You're going to work through the plays. You're doing it like it's game day, but nothing counts. You don't have any real money on the line. You're pulling everything together. Now, here's the critical thing you understand about virtual trading. It's much, much slower. It's much slower because you have to wait. You have to wait 24 hours. And this is one of the places that people really get messed up. When we're doing the back testing, when we're just going through the historical replay, you can go day by day and it only takes you 5 minutes, right? Not true with virtual trading. That whole thing that we just did over here, if we had done this entire, because remember we started, where were we? We were back, we were over here when we started, okay? It took us about 25 to 30 minutes. In real time, this would have taken you 1 month. We did a month's worth of a bullish trend in 25 to 30 minutes. Well, that means you got immediate feedback and you were able to assimilate the data and move forward. When you go to real-time trading, you set the trade up and you got to wait till tomorrow. Okay, so, you know, we're looking at this trade setup. We say, well, I got a bearish candlestick here right on my resistance, and let's see what happens. I got to wait 24 hours. Wait. 24 hours later. Oh, there's my data. I got a doji. Huh. What does that mean? I got to wait till tomorrow. Wait. 24 hours later. What happens? Oh, I got another bullish candle. I think I'm You see what I'm saying? So virtual trading can be painfully slow. Because it's so much slower in terms of getting the time done. But virtual trading is almost real. And that's the beautiful thing about it. Virtual trading is almost real. Let's come over here and let me show you what we can do with virtual trading. And you guys have seen me do this before. But I'll pull up this options house thing and we'll set a trade up really fast. In fact, let's do one in real. Let's do a real one here. Let's get out of the replay. Let's do one of these. FAS is a good trade setup. This was a good one from today. Okay, so by the way, once you're done with your analysis and you've been following along, you've been coming to Power Traders, your charts will stay set up. Basically, you only need to update them every day. You know, it doesn't take hours and hours of analysis. I mean, this chart, I basically set it up Sunday night, and it's still there, okay? So today, we technically should have triggered at 107.05. So let's go do that over here. If you got into it, great. If you didn't, then we are going to do it right now. I got to remember this password. I always forget it. There it is. Okay, so we're going to do FAS. Now, here's the deal. You've got a choice for FAS. What kind of strategy do you want to use? See, we haven't been working with strategy. We've just been working with picking a trade. Now we've done our analysis, bullish entry at 107.5. We're breaking up here out of our little resistance level. We had a little small stair-step pattern in here. Volume didn't come in the way I wanted. That's a negative. But moving averages look good. Moving averages are very bullish. Long terms looking good. Oscillators look good for the most part. You know, my Bollinger Bands are breaking up. I'm walking up along that top band there. It looks good. You know, my ADX and my parabolics, those are all looking good. My next target's up here about 112. Okay, so you say, this is a good trade. This is a trade I want to get into. You've done all your analysis. Now, here's the next question. As we get over here into the trade simulator, which is the virtual trading, if I can find the window again, this one's going to be almost real. We're going to pull it up, FAS. And I'll zoom in because I know it's really small. FAS, we put in here, we say go. FAS. And then what happens? Well, across the top, you see the quotes for FAS. We come down here to the order ticket. I'm in the old one. That's why it's feeling funky. Let me switch over to the new one. Sorry about that. This is the one I wanted. I'm like, why does this feel so weird to me? There we go. Okay, so we're going to type in our symbol FAS again. Okay. Now we got a little clunky chart over here. You can see how ugly that chart is. We've got all the quote data coming in over here. Where I guess they don't. I've told you guys this before. I use Options House because it's a little bit easier to use in the live class. But in my personal life, I actually use Options Express. That's why I always get confused when I'm doing Options House. But okay, here's the quote data up here. That's right. They keep moving it on me. All right, there's the quote data. So there's our bid and our ask. We come down here, we fill out the order ticket. Okay, so we put in the ticker FAS. Now we got to decide, do we want to add a stock leg or do we want to add an option leg? So in this case, let's do a stock. And we're going to enter the trade. We'll do a market order tomorrow morning. And we're just going to hit preview. Now we just placed the order. Now we have to wait. This is the equivalent of doing the real trade, but doing it with a virtual account. This is the equivalent of doing the historical replay, but doing it real time and getting real feedback. So tomorrow, this order is going to be filled. Now let's do a different order. Let's do an option order. Okay, so we'll do FAS. Come in here, do FAS. We'll do the option leg. And you say, well, what kind of option do I want? I want to buy? Well, which month do I want to buy? Well, now you got to start getting into all these option issues, you know. And where was it trading? It was trading at 107.50. So we'll pick a strike price in here. Pick the strike price, probably 105. Let's say we decide to do 2, and we'll do a market order, so that get filled first thing in the morning. But let's decide we want to do a trigger. Okay, so we're going to add the trigger in here. Can you guys see this? I don't think you can see it. I'm sorry. Click back over here. Here's your basic order form. Okay, so I did FAS, buy October 12, 105 strike price for a call, quantity 2 at a market price. And I'm sorry. I'm zooming in on this thing, but I'm not doing it. If I run my mouse off the screen, it makes it all jerky. Okay, then I'm going to add this trigger in here, and the trigger is going to make, I'm only going to get into the trade if it's going my direction. Okay, well, I decide that I'm going to set the trigger if the last price for FAS is greater than, and we'll say 108.01. Then go ahead and place the trade. Now we hit preview, and you can see the whole summary right here. If FAS stock has a last price that's greater than 108.1, then buy 2 FAS October 12, 105 calls at a market price. It's going to cost you about $1,500. Place the order. There it goes. Now tomorrow morning, it's going to be sitting there. Now here's the difference. Tomorrow morning, the FAS stock order will immediately be filled because it's a market order. It's going to fill first thing in the morning. The FAS option order will only fill if the contingency is hit. If FAS trades above 108.01. Now, why did I do that? Well, I like to sometimes try to get the stock on its way up. Go ahead and get the momentum. Because if a stock is swinging higher when it fills my order, it's going to keep going in that direction most of the time. If you have your trigger way down here for a bullish trade, you have to have the momentum of the stock heading down before it even gets your trigger. So you're probably going to immediately go into a loss, at least at the beginning. Okay? And then what happens? Well, we have to wait. I have no idea what's going to happen. So, I mean, I can't go any further in this example because tomorrow has to happen. And then tomorrow we come back and we readjust and we check this thing out. And if we had a profit, great. If not, well, so be it. You see what I'm saying? And that's the nature of doing virtual trading. It's much slower, and it's going to take you a lot more time. But it's much more reality. Okay, so now here's my next challenge for you. What I want you to do is I want you to be 70% of your trades are profitable. Now, that profit can be $1. The important thing is you're not losing money. I want you to be placing 70% of your trades for a profit. And when you do that, You've arrived at game day. Now, when you get into game day, step 4, we go to real-time, real trading. You're not questioning your strategy because you've been practicing it in virtual trading. You're not questioning your trade setups because you've been practicing in speed trading and your trading drills. You're not wondering if this is a double top because you've experienced 1,000 double tops already. You're not wondering if this is a moving average trade setup because you've already experienced 10 of them. You know exactly how to trade. Now all you have to deal with is good money management and psychology because you've already learned how to trade. And let me tell you, when you get into real trading, you're going to realize that it's a massive difference in virtual trading and real trading. What's the difference? I can't explain it. I can only say that it's psychology. When you start trading real money, you've got something of real value on the line. That's why it's so important that you go through the trader conditioning, because if you're going through the trader conditioning and you're learning the trade setups, when you finally get to real trading and you've done good money management, you've not risked too much money on an individual trade, and then the trade starts to do something that you don't want it to do, if you've conditioned yourself to react accordingly, you'll have patience. Hopefully, you've conditioned yourself so that just like a soldier training in battle has conditioned themselves that whenever the enemy does this, you react accordingly. Hopefully, you will react the same way in your real trading because that's the way you've conditioned yourself. And that's the idea behind trader conditioning. The idea behind trader conditioning is that you train yourself how to behave and how to expect to react during real market conditions. And if you will walk through these 4 steps, and if you get to real trading, you start losing money, you go back through them. But if you walk through these 4 steps and you condition yourself to be a great market analyst and be really good at timing your entries and your exits and be really good at disciplined at getting out at your targets and setting stops, and you've learned how to experience where to set your stops, if you'll practice this stuff, you'll get good. And if you get good, you can consistently make money trading the market. Does it mean that you're going to have an absolute fast pass to cash in the market? Well, you're still going to have to fight through it at times, and you're going to have to learn to get your emotions under control and all the other stuff. But you're going to have a much greater possibility if you've learned the hard lessons in fake money, if you've learned the hard lessons during the virtual trading and the trader conditioning. Because when you get to the real money, you're still going to have hard lessons to learn, but hopefully you've just accelerated the process. That's the bottom line. Hopefully you've just accelerated it. All right. Now here's the real question. How many of you are willing to do it? How many of you are willing to take the time to actually do what we just talked about? To go through all the details of the trade. To go through and drill your analysis. You're struggling with candlesticks. Don't just say, I don't quite understand candlesticks. I got to figure this out. No, you say, I don't quite understand candlesticks. I got to go drill this sucker. Let's get it in there. I got to figure this thing out. And here's what's going to happen. While you're drilling it, you're going to realize things you don't understand. And then you can go back and you can review those classes. You can learn more stuff. Now, here's my promise to you. If you will do for a little while what most people can't, I just said that wrong. If you'll do for a little while what most people won't, you can do for a lifetime what most people cannot. The question is, will you? Because the statistics say that most of you will not do it. The statistics say that most of you would rather watch television. The statistics say that most of you would rather do this or do that than do the little things that it takes. This is not that hard. Trader conditioning is not hard. The hard part about it is it's boring and you're not making a lot of money. But if you'll sit here and you'll have the patience to do the trader conditioning process for a little while, most people won't do that. But if you will, guess what? It's going to train you. It's going to get your skill sets up to the point where you can do for a lifetime what most people can't. And most importantly, if you keep yourself in check, be honest with yourself. People call me or write us and they say, hey, I did all the steps and it didn't work for me. I say, well, did you do the trader conditioning process? Yes, I did it. Well, what didn't work for you? We get in there, we start figuring it out a little bit. Turns out they made that leap from speed trading to virtual trading, and they were over trading. They got so used to doing it quickly in the speed trading that they were trying to place 4 or 5 trades a day. With virtual trading, no. You guys got to be honest with yourself. Are you really doing what I just explained to you? Are you really testing yourself? Are you really being honest? If you're honest with yourself and then you get all the way to trading real money and you start losing money and you go back through the process and you're honest with yourself and you do that just for a little while. And how long is the little while? I don't know. It might be 2 months. It might be 4 months. It might be 8 months. If you just do it for a little while, though, and you'll train yourself and you'll condition yourself, here's the guarantee. It will teach you how to be a chart trader. As you learn how to read the charts, you learn how to be a good chartist, you start to apply the strategies, you practice the strategies. I didn't even get into strategies tonight. I mean, shoot, I'm flying through stuff because we only got an hour and a half together. But as you get in there and you start practicing all this stuff, it will condition you to react so that when you're in the heat of battle, the likelihood of behaving and reacting accordingly to the way you should react is much, much higher. And you stand a fighting chance. You stand a real live fighting chance. All right, so my question is, will you do it for just a little while? Just a little while. Will you do what most people won't? Here's your action steps. I want you to do the trader conditioning system. Start practicing it. I said do it till your fingers bleed. That's kind of a tongue-in-cheek. I don't really want your fingers to bleed. Do it till your fingers bleed, though. Become a great trader, and ultimately, I want you to make a lot of money. Now, most of you are not going to be making a lot of money next week. That's just the reality because most of you're just now getting into this. But you go do this for a while, and I promise by the end of the year, you're going to be radically different. You're going to have radically different skills. You're going to have radically different understanding of the market behavior. You do it for 3-4 months, it'll be substantial. You do it until you hit those metrics I talked about, 60-70%. I promise you, when you finally get to real money, you will have to deal with emotion. You will have to deal with the fact that it's a difference. But you're going to be so much more likely to be successful just simply because you did for a little while what most people wouldn't. And most importantly, can you see why this would transform your ability to be successful? Can you guys see why this would be just like the holy grail of trading? Who was it that said that? Candace just said this is the holy grail for success. I hope you guys can see it. All right, I got a question for you real fast here. We're going to call it a night right on time. But I want to take a poll because Jeremy Newsom proposed this to me last week. He said, Jeremy, isn't that funny? His name's Jeremy too. He said, Jeremy, would you be interested, talking about me, in him and Paul Nelson putting together a Saturday workshop of just this back testing trader conditioning? And it would be like a 4-hour event, maybe a 5-hour event. And so I said, I don't know. I'll ask our students. So how many of you would be interested in doing a 4 or 5 hour trader conditioning back trading session, which would be a group session? It would be limited. We wouldn't have all of you in there. I mean, we would have to limit it. But how many of you would be interested in participating in something like this? I've given you the steps right here. But you say, hey, I really would like to have my hand held a little bit more. How many of you would be interested in that? Just quickly, just tell me. I don't take it personal, whatever you say. I'm just surveying. I can't even see who says what. Okay. All right, I'm going to close it down here in about 7 seconds. Okay, it's closing right now. Boom. All right. So that's good to know. Now, the next question I have for you is, how much do you think Jeremy Newsom and Paul deserve to be paid for this? More specifically, how much would you be willing to give them yourself? Again, I can't see who's answering what, so I'm just surveying your data just to find out what would service you guys the best. My goodness, I have a lot of socialists here. Everything should be free. It's amazing. All right, great. I'm going to close this down, and I appreciate your participation in my polls. All right, let's call it a night. And you guys, you've been fantastic. I hope tonight was everything that you hoped it would be. And most importantly, I just hope that you guys become rock star traders. That's really all I really want. I just want you to be rock star traders. All right. Let's see. I'd like to know that too. LR says, what the heck are socialists doing here? I don't know. Why would a socialist want to learn to trade the stock market? All right. You guys have a good night. And we will see you Monday. Monday night, we're going to start getting into option trading. Start getting into options. All right. Those of you who said you'd be willing to pay something other, I guess I should have asked. I don't know how to survey other, but you guys can specify how you would. I guess you can just write it in here, and I'll just tell them whatever you guys said. You guys can write it in there if you want to, and I'll pass the word along. Okay. All right. You guys have a good night. Moderators will shut it down once they've answered all the questions. Until then, I'll see you Monday. Have a great weekend. Happy trading. Good night.